Welcome to Buy, Hold, Sell. My name's Matthew Kidman, and today I have Ben Rundle from NAOS and Roger Montgomery from Montgomery Funds. And the market rout has given us opportunities, or has it? Some quality stocks seem to be a lot cheaper than what they were. Ben, bellwether for Australian quality stocks, CSL, buy, hold, or sell, come off 20-odd%.
I think it's a hold. I think it's an incredibly high quality company, and a lot of the earnings inside CSL have come from the company not issuing any shares, which hasn't diluted shareholders. It's purely coming internally, and they've bought back shares along the way. They spend a huge amount of money on R&D, which has been very fruitful for them in the past. The valuation is just eye-watering though, so I can't own it. So I'm going to say hold.
Right, CSL, Ben would love to own it, but it's too expensive. Buy, hold, or sell, Rog?
We sold it at $120 thinking it was expensive, and then it went to over $220.
And you bought it back?
No, the market is willing to pay for 3 CSLs for the growth of 1, effectively. Right. And we value the business as a sort of if it never grew again, it's probably worth $30 or $40 billion. Market was willing to pay over $100 billion for it. I think it's you often joke, Matthew, that I don't like mining businesses. I think this is the highest quality mining business in Australia. It mines and refines blood, and it does a brilliant job, and it's got great product development. It's got low exploration costs. It is extremely high quality, just too expensive. Okay. So I agree with Ben, and it's unfortunately it has to be a hold.
All right. One of your favourite subjects, real estate, REA, juggernaut in the field. Yeah. Come off a long way, probably 25%, buy, hold, or sell.
Look, again, very high quality business. There are 2 scenarios where this business suffers. Scenario number 1, very sharp fall in property prices, 20-30% fall in property prices, not good for it. Or a very prolonged rout in property, that would be bad for it as well because it affects listings. Yep. But absent that, I think it's actually reasonably priced at the moment. It's probably fair value, so you could buy it or you could sell it at this level. It doesn't really matter. Longer term, I think the opportunity is that the $7.3 billion that's been spent each year in the last couple of years on residential real estate marketing, they collect a bigger proportion of that over time away from real estate agents by offering real estate agents more value. The real estate agents then pay for that. So I think long term it's an excellent business. I'd love to see the share price fall another 15 or 20% to buy it, so it's a hold at the moment.
We'll try and organise that. Ben, REA, we know it's quality.
Yeah, it is very high quality. I mean, the key thing about REA is they just have such great pricing power because of their dominant position in the market. I'll say a hold as well on valuation. I'd like to own it. I think if it pulls back much further, you can. But for now, just given valuation, it's a hold.
All right, let's go to salary packaging, novated leases, Smart Group. Market darling, went from $0 to $1.5 billion virtually. Buy, hold, or sell?
Yeah, I think with a pullback you can buy a Smart Group. I think they obviously have exposure to car sales, which have been incredibly weak in Australia, but the novated part of the market is weathering that storm okay for the time being. They are also pushing in to further penetrate their current customer base, which is showing early signs of success, and it's a very high quality management team. You're buying on at about an 8% free cash flow yield at the moment with a strong balance sheet, so I think it's a buy on the pullback.
Rog, Smart Group, you're smart enough to buy or sell it?
I'm going to take a completely opposite view to Ben, and that is I think it's a sell. It was only in 2013 that the then Prime Minister Kevin Rudd called salary packaging and novated leasing a rort, and I think if Labor wins the election, you need to be worried that they might. I think if Labor wins the election, we might find that the outlook...
Too much risk in the political...
Exactly, too much political risk, and so for me it's a sell.
Sell, okay. All right, give us one, give us something high quality. Let's come back to the valuation range that you want to open the bag.
Challenges come back for good reason. There's a delay to the implementation or the hard implementation of the income for retirement products, CIPR. And I think that's justified. That's pushed the price down to about $10 now. The problem is that the demographics aren't changing, and we also keep in the back of our mind knowledge that David Murray in the Financial System Inquiry back in 2014 actually suggested mandating a proportion of people's superannuation to be put into lifetime annuities. So at the moment we've seen long-term annuities sales come off, and we've also seen this delay to what I think is appropriate legislation for them. That's temporary, it's not permanent, and so at around $10 I think it's good value.
Okay, Ben, something out there that's just quality that you just can't give it a miss at the moment?
Yeah, I think Reece, it's come back probably 20% for its highs. It's a company that's been listed for 40 odd years. Management have an exceptional track record. They've made a very rare acquisition, which typically when a company makes a large acquisition offshore, you know, alarm bells ring. But I think with the track record that they've got, and the fact that the business that they've bought does such a lower margin than the core Reece business, I think the management team there will be able to execute on that, and we'll see a rebound from the current share price.
It might be quality, but these two gentlemen, they love buying at the right price.